Hello, Maverick traders, and welcome to today's currency recap. It is March 2nd. Can't believe we're in March already. Today was an exciting day in the markets after a pretty steep sell-off in overnight trading. Equity markets managed to fight back and end the day on quite the bullish note. Oil up slightly, gold down very slightly, crypto kind of just chopping around. The other interesting thing to note is that the rally in equities follows also a sharp rally in the 10-year yield, which is really unusual. I was very surprised to see that. The 10-year yield is back above 4%, and equities managed to close nearly on their highs today. That's impressive no matter how you look at it. Now, there is an interesting phenomenon here happening in both the S&P 500 and the total world stock index. It's a phenomenon I call X meets the spot. And that's something that happens when you have a support trend line and a resistance trend line intersecting price. So you can see that right here. You can see on the chart visually where those blue trend lines kind of make that X. Now, whenever price is trading around an X like that, it is basically do or die time for the market. The market's got to make up its mind. Is it going to trade back above that broken support trend line? And is it going to trade back above resistance, in which case that resistance line will become newfound support? Or are we going to break below both trend lines instead? I wish I could tell you which way we're going to go. I don't have a strong feeling right now based on today's action, which was a little unexpected for me. But I would have to say that no doubt the market is in a bearish mode overall right now. Doesn't mean that we won't see another update tomorrow necessarily, but yeah, it's a very interesting juncture, as technical analysts like to call it. Again, very similar story in the total world stock index, not too much to add there. Over in the land of cryptocurrencies, well, we're just chopping around within those two-sided targets that I had coming in, around 24,692 and 27,385. I have a feeling we're going to base sideways for some time, and then we're going to see either a fairly large breakout or a breakdown. But we should know the parameters of the base in terms of the upper end of that base and the lower end of that base if the market continues to trade sideways for a few more days. What's interesting to note here is that previously the moving averages were very far away from price. And like I said in a video, I think this was a few weeks ago, markets have to correct either through price or through time. And so far, crypto has impressively corrected through time, more or less. So the market's traded sideways long enough for those moving averages to catch up, which in my estimation is generally speaking a bullish development, which is surprising to me. I would have not expected the broader crypto market to hold up as well as it has in the face of what's been rocking equity markets over the last few days. So as a result, I'm going to be giving the market a -2 rating here. We're below really both moving averages, although we're technically bumping up against the 50 right now, and the slope is fairly neutral. So this rating could easily change tomorrow. In terms of what's on the news calendar, there isn't much except for some more inflationary data out of the US tomorrow morning at 10 a.m. Moving on now to currency analysis. Cryptocurrencies, little choppy. Litecoin, Ethereum, Bitcoin Cash, Bitcoin, all down on the day, but relatively speaking, still hanging in there. If we saw a near 3% sell-off in stocks, that would be pretty big. In Litecoin, it's just another day. Over in fiat currencies, it's a very interesting picture. The euro, the pound, and the Kiwi dollar underperformed on a relative basis, while the North American currencies, the dollar and the Canadian dollar, outperformed on a relative basis, and the yen and the Swiss franc kind of just hung in there. So in terms of velocity, we'll take a look at the actual price charts in just a moment, but although the pound looks bearish on the velocity scoreboard right now, I think that has potential to change in the very near future. And although the New Zealand dollar and the Canadian dollar are holding positive velocity scores, I think they're trading right into resistance. So this is one of those times where I'll say the velocity scores should be taken with a big grain of salt. I mean, it's an important factor in terms of determining which currencies are in play, but you also do have to look at the respective price charts for each of these currencies as well, and that's exactly what we're about to do right now. Okay, so I'm going to go through all of the currency baskets today because I think they're all interesting in their own ways. Right now, we've seen the Aussie break below this trend line, break below the support box, and we're now trading within the next support region down below here. So whether we bounce from here or not remains to be seen, but I'm very interested to see what happens as the momentum indicators I track, the MACD and the RSI, are fairly neutral, if not leaning bearish. But then you look at this candlestick formation, and we've got 3 indecision candlesticks in a row, which, well, 4 really, which might indicate some waning bearish momentum. And we could see the Aussie bounce. So, you know, it's kind of in no man's land. I just don't see a good trade right now. So I would say the Aussie should be avoided unless you see a very clear setup on an individual currency pair. Canadian dollar, like I mentioned, the velocity score is reading bullish, but we're trading right into prior resistance. And the momentum indicators are leaning bullish. So again, I have a mixed bag here in terms of what the technicals tell me. Everything's looking bullish, but we've traded into this resistance area. Here's how I look at it. If we get a nice close above this resistance box right here, then we can definitely look for higher in the Canadian dollar. On the other hand, if we break below this trend line, then I think we'll have a retest of the January 2023 lows. The Swiss franc, again, kind of hung in there, but if I take a closer look at this chart pattern here, we have this rising wedge. We had some pretty stark bearish divergences forming. So I was leaning bearish on the Swiss franc to start the week. And I don't really see any reason for that to change. You know, so I'm interested to see how the Swiss franc sets up. But frankly, this is kind of trading in no man's land as well. If we pull up our Fibonacci retracement levels, you can see we're right around the 50% decline mark of the rally that kicked off towards the end of January. So kind of in no man's land. You know, if I had to draw some trend lines, I could draw like a bearish flag here, but we've kind of broken out the bottom. Long story short, I'm inclined to avoid the Swiss franc the same way I'm inclined to avoid the Australian dollar. Euro is very interesting. So we were trading inside this triangular formation, this barrier triangle that I've been keeping an eye on for quite some time now. But we've traded right into resistance and we came off hard. Now, bearish divergence in the relative strength index, bearish divergence in the MACD, but look at how the MACD found support on the 0 line and the MACD lines are currently crossed up. That is a little bit odd to me. I'd expect if we have another day of selling that the MACD will cross back down on the daily. But when I look at the 4-hour, I can see that the MACD has crossed bearish and the RSI is trending lower. So as of right now, I'm curious to see whether or not this is a false breakout in the euro. We can even draw another trend line like this. I wouldn't be surprised to see the euro test this trend line, and then we'll see whether we get a bounce off of it or a break below. So right now, I'd be inclined to play the euro on the short side, provided there's a clear currency that is outperforming. And the pound, although bearish in terms of the daily velocity score, I think it's coming into support, and I'll show you just in just a moment why I think that's support. From an Ellie wave perspective, to me, this is a impulsive wave higher, followed by a large sideways triangle. So that tells me that more likely than not, the next big move, directional move in the pound is indeed going to be the upside. Now, if I pull up my fib retracement levels off of this leg up, which is the last leg, corrective leg of the triangle, before we find support and we accelerate, if my triangle forecast is right, you can see we've got good support here coming in at the 61.8% Fibonacci retracement level. Momentum indicators, however, still have some room before they get oversold on the 4-hour. The 2-hour is close to getting oversold. The 1-hour is bouncing off of oversold levels. And as we get lower and lower, we start to see bullish divergences forming, right? So that's the 30-minute chart. We start seeing some bullish divergences. So although the velocity score on the day is bearish, you know, I'm a little bit hesitant to continue shorting the pound, provided we find some reasonable support off that 61.8% level. And then we've got the yen, which kind of hung in there today, but trading within this wedge once more. Momentum indicators don't tell me anything, but I would like to see one more touch of the lower trend line of this wedge here before we break out. So I think the yen still has a little bit more lower to go before we see that eventual bullish breakout. And the New Zealand dollar, great performance over the last couple days, but traded right into this resistance area where we've broken down from in the past, most notably back on February 13th. So I'm very interested to see how we treat this resistance area. Things the Kiwi has going for it is breaking out of this long-standing resistance line that's capped all the rallies since, well, I guess not that long, but since January 24th. And we've broken clean through that line. So curious to see if the Kiwi can maintain its upward momentum. One interesting trade would be potentially taking a look at Kiwi yen. And then finally, we've got the dollar basket where we've reached my first target, which was the high from January 6th. I wouldn't be surprised to see the dollar pull back here. Very simple forecast there. I think the dollar's due for a pullback. If we look at momentum indicators, you can see how we're starting to get some bearish divergence in the RSI and in the MACD as well, right? So I think the dollar has been bullish, and I would only look to buy it on a reasonable pullback right now. I think it's dangerous buying it into these prior tops where we have some resistance. So my personal game plan for the dollar would be wait for a pullback. So in conclusion, equities could very well see continued relief rallies tomorrow. The pattern is very interesting in equities. We tend to see an overnight sell-off, a bullish open, and then a bearish close. And that kind of bucked the trend today where we traded bearish overnight, opened bearish, and then closed bullish. So I'll be interested to see what the overnight trading looks like. And I think tomorrow's session could offer some short-term trading opportunities. And like I said, the dollar's in a pullback, but broadly speaking, we remain bullish. All right, so that's everything from me, folks. Thanks for tuning in. Don't have any Friday classes. The next class, the next class will be the Saturday currency trading room. So thank you. Thanks very much for watching. I'll see you guys soon.